Imagine a financial earthquake so massive that it shakes the very foundation of America's economic dominance. An earthquake triggered not by war, not by sanctions, but by a single, calculated move worth $632 billion. China has quietly pulled off one of the boldest financial maneuvers of the decade, exiting a staggering $632 billion in U.S. debt. At first glance, it might look like a simple portfolio adjustment, but this is far more than numbers on a balance sheet. It's a strategic power play that sends shockwaves across the global economy. What makes this story even more compelling is that Canada, often overshadowed in the grand geopolitical narrative, could be the unexpected winner in this unfolding drama. And here's the twist. Donald Trump, who once promised to secure America's economic supremacy, never saw it coming. While Washington was busy underestimating Beijing, new alliances and opportunities began taking shape elsewhere. Today, we're going to break down why this move changes everything, how it weakens U.S. leverage, and why Canada is suddenly in a position of quiet strength on the world stage. When China decides to pull $632 billion out of U.S. debt, it's not just a financial decision, it's a strategic declaration. For decades, America has relied on the implicit trust that nations will keep buying its debt, sustaining the dollar as the global reserve currency. This trust gave the United States immense leverage, not just economically, but politically. Yet, when the second largest economy in the world steps away from that table, it sends an undeniable signal: the old rules are changing. And the first question we must ask is this: why now? China understands something fundamental about power. It's never about what you say, it's about what you can afford to do. By reducing its dependence on U.S. treasuries, China is quietly reshaping the balance of financial influence. For years, Washington assumed that Beijing's vast holdings in U.S. debt tied them together like an economic marriage. In reality, China has been preparing its exit strategy for a long time, building trade networks, securing energy supplies, expanding Belt and Road initiatives, and even increasing its gold reserves. This isn't a sudden move. It's a calculated step in a much larger game, where control over capital flows equals control over the future. Now here's where it gets fascinating. When China offloads that debt, it doesn't just hurt America. It creates ripple effects that alter global capital markets. Countries start asking if China no longer sees U.S. debt as the safest bet. Should we? That psychological shift alone erodes the perception of absolute U.S. financial dominance, and perception in global finance is reality. Once that belief starts cracking even slightly, the cracks grow fast. Nations diversify, investors hedge. And suddenly the economic certainty America once enjoyed starts looking like an illusion. What does this mean for Canada? Opportunity, because power doesn't vanish, it relocates. Capital seeks stability and predictability, and in a world where U.S.-China tensions define the narrative, Canada positions itself as the calm in the storm. Strong institutions, resource wealth, and a reputation for neutrality make it an attractive destination for investment fleeing volatility. In other words, what the U.S. loses in dominance, Canada can gain in trust. But, and here's the real point, none of this was on Trump's radar. His focus was tariffs, trade wars and rhetoric, while the tectonic plates of global finance were already shifting beneath his feet. China's move is more than economics, it's philosophy in action. It's about patience, foresight, and the courage to step away from a system before it collapses under its own weight. And that's a lesson for all of us. Power belongs to those who prepare in silence while others argue in the spotlight. Remember this: the future doesn't reward those who cling to the past, it rewards those who anticipate what's coming next. When we talk about the global economy, we often frame it in terms of numbers, charts, and forecasts. But at its core, economics is about confidence. Confidence in systems, in stability, in the belief that tomorrow will look like today. And for decades, U.S. debt has symbolized that confidence. It was more than a financial instrument, it was the world's safe haven, the gold standard of security. Nations bought U.S. treasuries not simply for returns but for reassurance. They trusted the system, they trusted America. China's $632 billion debt exit challenges that trust at its foundation. Because when the second largest economy signals that it no longer views U.S. debt as untouchable, it introduces doubt. And in global markets, doubt is dangerous. It's like a whisper in a crowded room. Quiet at first, but once it starts spreading, everyone begins to listen. If China sees risk, then maybe there is risk. If China is hedging, maybe others should too. And just like that, confidence fractures, and the world starts looking for alternatives. This is where the psychology of power becomes fascinating. For a long time, America wielded financial dominance because of belief. Belief in its stability, its governance, its resilience. But belief is fragile. It doesn't collapse in a dramatic explosion, it erodes slowly, through a series of decisions like this one. China is not simply selling bonds. It is selling the story of American infallibility, and the story that replaces it, multipolarity. A world where influence is distributed, not concentrated, where trust is diversified, not monopolized. Canada, in this context, becomes more than a bystander, it becomes a beneficiary of this psychological shift. When markets feel the tremors of doubt, they seek solid ground. And what does Canada represent? Stability without the volatility of superpower politics. A country with a strong legal framework, vast resources, and a reputation for measured governance. In an era of uncertainty, that matters. Capital will not disappear, it will migrate. And Canada is increasingly where it wants to land. Now, here's the philosophical layer to all of this: trust, once broken, is almost impossible to restore fully. The U.S. can project strength, it can issue statements, it can even impose policies, but it cannot force belief. And belief is what underpins the very value of its currency, its bonds, and its global influence. Once that faith begins to waver, no amount of rhetoric can fully patch the cracks. So what does this tell us? It tells us that real power isn't loud. It doesn't announce itself with fanfare. It moves in silence, reshaping the future while the world debates yesterday's headlines. China understands this, and if we're wise, we'll understand it too. Because the global order isn't collapsing. It's evolving. The question is, will we adapt, or will we cling to illusions until they shatter? Now let's examine why this isn't just about economics. It's about leverage. For years, U.S. debt has been more than an investment for China. It's been a strategic tool, a bargaining chip in the delicate game of global influence. Holding over $600 billion in U.S. treasuries gave China an unspoken advantage, a financial tether that linked the two economies in a way that guaranteed mutual vulnerability. As long as China held that debt, it held a seat at the table, where America had no choice but to listen. By walking away from that position, China is signaling something deeper. It no longer sees that leverage as necessary, or perhaps even desirable. Think about that for a moment. For decades, analysts warned that if China ever sold off U.S. debt, it would risk destabilizing its own economy. And yet here we are. That decision tells us something profound. China is prepared for the consequences, because the long-term reward outweighs the short-term turbulence. That's not a reactionary move, that's strategy. That's foresight. What does that mean for global power dynamics? It means that the old model, where the United States was the gravitational center of economic stability, is losing its magnetic pull. China is effectively saying, we don't need your orbit anymore. And that changes the entire geometry of influence. Suddenly, trade negotiations, technology disputes, even military posturing, all of it takes place on a different board, one where the rules are shifting and the pieces are no longer predictable. Canada finds itself in an interesting position here. When one player moves away from dependency, the ripple effect creates space for others to step in. Capital, trade partnerships, and diplomatic goodwill begin to look for safe, neutral ground. And Canada, with its resource strength, political stability, and strong ties to both Western and Eastern markets, becomes that ground. It's not about Canada replacing the United States. That's not the point. The point is diversification. The world is diversifying its bets, and Canada is becoming one of the safest bets on the table. But let's not overlook the psychological dimension. In global power struggles, perception is often more decisive than reality. The perception now is that America's dominance is negotiable, that the system can function without unquestioned loyalty to the US dollar. Once that idea takes root, it spreads, because ideas, unlike currencies, don't need an exchange rate, they just need belief, and belief is contagious. So, what does this mean for us? It means that influence is no longer about who holds the most weapons or the largest GDP. It's about who can adapt the fastest to a world where leverage is fluid and alliances are strategic rather than sentimental. Those who cling to old hierarchies will find themselves standing on foundations that no longer exist. And those who recognize the shift will quietly, steadily build the future. The question isn't whether change is coming. It's whether we're ready to live in the world it creates. Now, let's talk about the part nobody wants to admit. This is not just about economics, it's about identity. Nations, like individuals, define themselves by their position in the hierarchy. For decades, America has built its identity around being the center of gravity, the superpower everyone orbits. That sense of certainty, that psychological dominance, was as valuable as any dollar printed in its mints. When China walks away from US debt, it's not just cash leaving the room. It's confidence, it's the story America told itself for generations beginning to fray at the edges. And what happens when the dominant narrative starts to unravel? People double down on old illusions. They cling to the past because the present feels unstable. That's why you hear voices insisting nothing has changed, that this is a temporary setback, a minor adjustment. But history teaches us something uncomfortable. Great powers rarely fall with a bang. They erode in increments so small they feel like background noise until suddenly they're deafening. That's the danger, mistaking quiet change for no change at all. Here's where Canada's role becomes fascinating. Canada doesn't need to play the role of a superpower to win. It doesn't need the weight of dominance, it needs the wisdom of positioning. By maintaining stability, neutrality and trustworthiness, Canada offers what the world is desperate for right now: predictability. When uncertainty becomes the global currency, the nations that provide certainty will thrive. And this is where the philosophical shift happens. In a world where empires shrink and influence scatters, leadership isn't about shouting the loudest. It's about listening the deepest, adapting the quickest, and standing firm when everyone else is shaking. Now, think about what this means for the future of alliances. If the old model of power was built on control, the new model will be built on credibility. And credibility cannot be bought with military might or borrowed through debt. It has to be earned every single day through action and principle. That is why this moment isn't just an economic pivot, it's a moral one. The nations that emerge strongest will be those that understand power as responsibility, not dominance. And if we zoom out for a moment, what do we see? We see a world where the old script no longer fits the stage, and the actors who cling to it look increasingly out of place. The stage belongs to those willing to improvise, to write new lines in real time without fear of the unknown. Because here's the truth, uncertainty isn't the enemy, it's the invitation. The invitation to rethink, to innovate, to lead differently than we did before. So the question we leave with is this: will we see this as a loss, or will we have the courage to treat it as a turning point? Because history is not written by those who cling to yesterday. It is written by those bold enough to shape tomorrow.